recently received a 1099 NEC tax form and now you're not exactly sure what to do with it as you file your income taxes. Hi, I'm Ginny Silver. I'm the founder of the California Entrepreneur Collective and contributing author to Entrepreneur Media. I want to inform you with the must-know information that you need to understand now that you have received a 1099 NEC. If you are someone who is self-employed, such as a small business owner, an independent contractor, a gig worker, or anyone else earning self-employed income, if you do work for a business and they pay you $600 or more throughout the course of the year, then they are required to issue you a 1099 NEC for non-employee compensation. This is a tax form that is filed with the IRS and is sent to you. A 1099 NEC documents the non-employee compensation that business paid you for doing contract labor. This is not the same as an employee-employer situation. A 1099 NEC worker is going to be someone who does not take direct instructions from that person that is paying them for that work or services. Because they are not in an employee-employer relationship, that person is defined as an independent contractor. Because they are not an employee, they are not on payroll, and therefore payroll taxes are not taken out from their pay. This means that that individual is self-employed and therefore must pay what is known as self-employment tax. An employee paycheck is subject to having payroll taxes removed, which covers Social Security and Medicare. Similarly, someone who is self-employed must also pay Social Security and Medicare from the payments that they receive. However, because this is not automatically taken out by the individual or the business that is paying you, it is on your own responsibility to pay this tax. When someone is self-employed and they file self-employed income taxes, they are going to be obligated to pay not only federal and state income taxes, but also something that is called self-employment tax. Self-employment tax is calculated at a rate of 15.3% of your net income. This 15.3% breaks down into a portion for Medicare and a portion for Social Security. Whereas employees will be subject to having payroll taxes taken out, self-employed individuals will pay this self-employment tax instead. What you need to understand is that the amount that you were paid over the course of that year is going to be subject to 3 different taxes: federal income tax, state income tax, and self-employment tax. When you receive your 1099 NEC, it's important to understand that that tax form must be used when you file your income taxes. If you are having your taxes professionally filed by a professional tax preparer, then make sure you bring that 1099 NEC with you, along with any receipts for business deductions that apply to the work that you did, so that those can be used as deductions to lower your taxable income. If you're filing your own income taxes, as someone who is self-employed, you will claim all self-employment income and deductions on Form Schedule C. Important to keep in mind that even if you did not receive a 1099, but you received $400 or more in self-employed income throughout the course of the year, then you are required to file and pay self-employed income taxes. This is different from the federal filing minimum for W-2 earners. $400 or more, regardless of what tax forms you receive for those $400, it is under your obligation to claim it on your income taxes and pay self-employment tax. Now, for those of you that did not realize that you would need to pay taxes on this income, or for those of you that perhaps couldn't or didn't set aside enough money to cover your tax bill once you enter this information in, I want to make sure you understand that you can request a payment plan with the IRS. Requesting a payment plan is much better than delaying your payment, because if you delay your payment, it's going to be subject to accruing interest, penalties, and fees. Setting up a payment plan is a good way to avoid accruing unnecessary interest and fees. Now, the last thing that you need to understand, which is also very important and can result in more penalties and fees, is understanding that you may be obligated to pay estimated quarterly income tax payments going forward. Once you have taxes due on self-employment income, if you expect to owe $1,000 in the next upcoming tax year, then you are obligated to pay estimated quarterly income taxes. Estimated quarterly income taxes is essentially your best guess at what you think your tax bill will be next year, broken down into 4 even payments. These payments are due on a quarterly schedule, with the first payment due on tax day, April 15th. Unfortunately, if you fail to pay these estimated payments by that last November payment date, then they will be subject to interest and penalty. Okay, you guys, let me know the questions that you have down below in the comments.